Good morning, everyone. Darius Dale here to present our macro minute for Thursday, March 31st, 2022. We got quarter in, month in, all that kind of good stuff going on this morning. But starting with markets, we have stocks down, commodities down, crypto flat, dollar up, global bond yields down. Big news this morning: Washington is preparing to release roughly 1 million barrels per day of oil from the Strategic Petroleum Reserve for roughly 6 months. So, roughly around 180 million barrels there. That's roughly 2 days of global consumption on that, or roughly thereabouts. This comes ahead of today's OPEC Plus meeting, where the cartel is actually expected to stick with its strategy of a modest output boost in May. So, sort of countervailing forces there in the energy market. Elsewhere, we have officials from Russia and Ukraine are set to resume talks via Friday. There's no immediate confirmation from Moscow, but we're getting that sneak peek from Ukraine. The Ukrainian negotiator said they're hopeful to have enough agreed on paper in another week or so to be able to move forward towards a meeting, face-to-face meeting with President Putin and President Zelensky out of Ukraine. That would be obviously a positive development for markets over the next few weeks. So we're going to keep our eyes on that. Obviously, this SPR release has been negative for crude oil, down 6% day over day after we've called out that risk yesterday in our lead of morning note. It's down 10% week over week, inclusive of that move. Dragging down bond yields in Europe. So 10-year bond yield down 8 basis points, and actually dragging down policy rate expectations out of the ECB. When you look at the overnight index swap forward curves, it priced in euros, those are down 9 basis points as well. So unwinding a little bit of that hawkishness we've seen earlier this week. On the macro front, the preliminary March inflation data out of Europe blew consensus expectations out of the water, which suggests we could see similar dynamics observed here in the US when the March CPI data are released on April 12th. An upside surprise anywhere near the magnitude of what was observed across the pond all but solidifies back-to-back 50 basis point rate hikes in May and June, per all the commentary we're getting from Fed heads recently, as well as a likely pull forward of quantitative tightening potentially into May. Which obviously is a month away. So we got German EU harmonized headline CPI. These are all EU harmonized figures. That accelerated to an all-time high of 7.6% year over year in March. That was against a Bloomberg consensus estimate of only 6.8%. France's CPI accelerated to an all-time high of 5.1% in March. That was against the Bloomberg consensus estimate of 4.9%. Italy, the lone sort of major European economy that came in below consensus estimates, that accelerated still to an all-time high of 7% year over year in March. And then Spain just dunking on Bloomberg consensus estimates, 360 windmill through the legs behind the back, Vince Carter style, accelerated to an all-time high of 9.8% year over year in March. That came in against the Bloomberg consensus estimate of 8.4%. Taking it to the chart this morning, what we're showing here are the interest rate probabilities for the FOMC meetings, the next kind of calendar of FOMC, the next 1 year forward of FOMC meetings. As you can see right now, based on what's priced into Fed funds futures, we have roughly 1.75 cuts or hikes priced in, and roughly kind of roughly around another 1.5 cuts priced in for June. So we're basically saying there's going to be about three rate hikes between now, a little bit more than 3 rate hikes from a probability standpoint between now over the next couple of meetings. We think those numbers could easily get to 2 and 4 if you do see a big upside surprise in headline CPI and CPI measures, over the next when that data are released in April. And obviously you're going to get follow through in terms of PPI, follow through in terms of core PCE at the end of next month as well. So be on the lookout for that. With respect to today's probable range setups, S&P 500 is still bearish FAMs, still probing the upper boundary of its probable range with minus 8.4% of downside. Still trying to probe if it wants to break out the neutral VAMs. We'll see. We got earnings season next week. Market's been dominated by macro. You might get a sneaky uppercut from some still solid earnings. Reminder, these are Q1 earnings. Nothing's really bad happened to the economy in Q1. Again, all the growth slowdown is ahead of us, not in Q1. And so be aware of that, be macro aware of that. WTI neutral VAMs minus 9% of downside, inclusive of today's move with 19% of upside here. So definitely be buying dips there. Bloomberg dollar index, bullish VAMs at the lower boundary of its probable range with 2.1% of upside. 10-year treasury yield, bullish VAM still minus 16 basis points of downside versus 29 basis points of upside. Bitcoin's bullish VAM still minus 10% of downside versus 2% of upside in its probable range. Ethereum bullish VAM still minus 13% of downside versus 3% of upside in its probable range. And then lastly, gold, neutral VAMs, minus 3% of downside versus 4% of upside. So with that, Darius Dale presenting our macro minute for Thursday, March 31st, 2022. Best of luck out there today.